These days, AI can help you adopt better time management, but it can't stop colleagues booking meetings during lunch. But how about being able to easily adopt industrial AI to streamline your business? Siemens Accelerator helps you find the right AI providers and easily understand what they offer, so you can use modular solutions to quickly scale up and grow your business. That's AI for real, from the global market leader in industrial AI, Siemens. Learn more on usa.siemens.com/AI.
As a contractor, I don't pay for materials I don't use. So why would I pay for stuff I don't need in my mobile plan? That's why the new MyBiz plan from Verizon Business is so perfect. Now I can choose exactly what I want, and I only pay for what I need.
Right now, with MyBiz plan, get our best price, as low as $25 a line. Visit verizon.com/business to get started today. New lines only. Price per month with 5+ lines. Includes autopay and paper-free billing and promotional discount. Taxes, fees, economic adjustment charge. Applicable add-ons, prices, and terms apply. Guarantee applies to base monthly rate and stated discounts only. Add-on prices additional. Offers end September 30th, 2025.
When your company has a professional position to fill, are you really seeing the best candidates? You may be missing an untapped resource. Ideal candidates not currently job searching. People not actively looking, but who may be open to the right opportunity. It can be the difference between a good hire and a great hire. Specialized Recruiting Group is ready to find the top talent you need. Go to srgpros.com right now to get started.
Bloomberg Audio Studios. Podcasts, radio, news.
This is a breaking news update from Bloomberg. Instant reaction and analysis from our 3,000 journalists and analysts around the world.
Amazon shares down in the after hours. The company sees third quarter operating income $15.5 to $20.5 billion. That was in line with estimates that are at $19.42 billion. I guess maybe on the lower side, it's not in line. And second quarter operating income, though, blew past estimates at $19.17 billion.
Yeah, I do think that third quarter operating income could possibly, especially the downside or the lower end of the estimate, be problematic. Let's see what our team has to say. It is such a massive company, as you know. We need two Bloomberg Intelligence analysts to really break it down. With us is senior technology analyst Anurag Rana and senior analyst for e-commerce and athleisure, Poonam Goyal. Anurag out there in our Chicago bureau, and we've got Poonam in our Princeton bureau. Hey, Anurag, I want to start with you because AWS is always so important when it comes to the top and bottom line here at Amazon. Walk us through what we got on that side of the business.
Yeah, I mean, as you see, they met expectations on AWS growth of 17% in constant currency. But, this is where we are saying that this is probably not good enough because Microsoft beat by a big number, Google beat by a big number. And the big question is going to be, why didn't Amazon beat by a big number? And I think we look forward to hearing what management has to say about it.
I want to bring in Poonam here because one thing that I noticed when I was reading this in real time, the statement from CEO Andy Jassy, also president over at Amazon, was Poonam how much he talked about the connection between the shopping experience for Amazon's core customer and artificial intelligence. Because up to now, and maybe I'm wrong, but I've thought about AI in the context of AWS. But what he's trying to communicate to investors is the effect that AI is having on how people are buying stuff. Is it actually doing that?
Yeah, absolutely. AI is a big deal in e-commerce, and Amazon's been investing a lot to improve the customer experience. It starts with search, right? When you go to Amazon and you're searching something, they've just improved it. And they've also launched Rufus, which is their AI or your personal assistant. So that's really been helping shoppers and just, figure out what they want to buy. You want to buy a microwave, but what microwave is better? The shopping assistant helps you not only bring choices forward, but also helps you navigate through the descriptions, the pricing, etc. So it really helps improve conversion. And that's where AI is helping on the shopping side.
What metrics do you look at, Poonam, to make sure that the investments that they're making are actually leading me to spend more money on Amazon?
So Amazon doesn't share all the metrics that we'd like to see, but we know that they've talked about conversion and how that's improving. So I think that's the number one metric. To any extent, when we get color around that, I think that is what's most important. If you think back, online conversion, just broadly speaking, is in the low to mid single digit range. So only about 5% of shoppers that go online to shop actually transact. It's very, very low compared to a brick and mortar store. And every little that Amazon does on AI or anything else is going to help boost that conversion. It's higher on Amazon, of course.
Let's remind everybody that in the aftermarket following earnings, Amazon down about 2.6% here. It's only up about 7% year to date. Anurag, you talked about, the blowout numbers that we've gotten from the likes of Alphabet and others when it comes to cloud. AWS, as we said, the growth was in line with what the street was expecting. Why might they not have outperformed what we got from some of the other hyperscalers?
The first thing is they are much larger than all the others. Their run rate is over $100 billion. So, that's one factor. And, to be very honest, growing 17-18% at $100 billion is not a bad deal. But the second part is when you look at somebody like a Microsoft, they are getting the benefit of, ChatGPT transactions being run on their cloud. So, that's a huge benefit for them. Amazon doesn't have that option, frankly, because they don't have a ChatGPT like, application that's running. A lot of what they're doing is on the enterprise side. And those applications are currently in the build phase, which means over the next several years, we should see the trickle-down effect of those usage, driving up AWS. So I think there is a timing mismatch. I don't see, them as being inferior in any way to some of the other cloud providers. In fact, as I said, they are the largest with probably the most services out there right now.
Do they stay the largest? I mean, they certainly were early into this. I think you could say that they helped invent this. I mean, Andy Jassy, certainly that's why he's CEO after heading up the Amazon Web Services and then being picked by Bezos to take this job. Would you say that they're comfortably in first, or is Azure at Microsoft, Anurag, and also is Google Cloud doing a good job of catching up?
They're both doing a very good job of catching up. And as I said, Microsoft has an inherent advantage there. So maybe down the road, several years from now, let's say 3 to 4 years, they would be neck to neck. But, one of the things is this is a market where we think the entire market is growing much bigger. We don't see 5 years from now AWS being a smaller business than where it is right now. The rate of growth depends on the propensity of enterprises to spend on technology. But we think all three of them will benefit with cloud becoming much bigger over the next 3 to 5 years.
We should point out some more of the statistics on Amazon. Online stores net sales, $61.5 billion, up 11% year over year. Physical stores net sales, about $5.6 billion, up 7.5% year over year. Third-party seller services net sales, $40.35 billion. That's up 11% year over year. Poonam, they also say in some of the commentary, our conviction that AI will change every customer experience is starting to play out. So we talked about it a little bit earlier. I mean, what they are doing in terms of getting people to spend more time on the platform, it's all happening.
Yeah, it's happening. I mean, all the numbers that you just cited, they outperformed expectations. So whatever they're doing, and they're doing a lot, they're doing it right. We think that Amazon is making the right moves to expand their retail footprint online. Once again, it comes back to what do customers want. They want everything. And Amazon's a marketplace that really sells a lot of different types of goods. And they want the speed. And speed is key here because you can get things same day or next day from Amazon without paying a fee being a Prime member. So that's really key here. And the numbers in the second quarter were actually quite impressive on the retail side. They did do really well. Prime Day sounds like it was a great success. We'll hear more on the call, but the numbers outperformed on the retail side.
Is there a read, a follow through, if you will, when it comes to what this tells you about kind of consumers and the U.S. economy?
Yeah, I think consumers are focused on value, and I think Amazon does give you value. They are trying to keep prices low, and this may be a function of that where, as consumers shop around and they're seeing price hikes due to tariffs, either they've already started or they're coming up, they're finding deals on Amazon. So they're going there, and that's a nice place for Amazon to be as we move forward into the second half.
I want to ask both of you, and let me start with you, Poonam. I mean, what are you thinking about that you want to listen for on the call that the company does with analysts and investors, top of mind, or what you would be asking?
Yeah, for me on the retail side, it's really the tariff question and the de minimis question. We know we're losing the de minimis exemption. So how should we think about that in terms of their third party, especially where they do rely on some of those drop shipping, especially haul? And then the second thing I'm looking for is just how they're going to be pricing the goods as we move into the second half, because for now we have been somewhat insulated with a 10% pause on most goods outside of China, but that we know is changing in the back half.
Hey, Anurag, come on back in here, because one thing that I'm looking at the write-ups right now, and it does seem like, what we said at the beginning, that this operating profit estimate for the current quarter really underwhelmed. Why is it that Amazon doesn't get rewarded for being less profitable the same way that other companies are rewarded for this? Or maybe the better way to ask it would be, the measure of capex and why, investors are so okay with Meta Platforms spending so much money, but Amazon's operating profit not coming in as high as they thought it would. Is it because Meta's just printing money and has a higher margin business?
I mean, you have to remember, Amazon has a lot of retail footprint also, so you can't really equate them to a tech company as is. I mean, it's only the AWS part of it. But frankly speaking, if you go back to the history of Amazon, for probably 10, 15 years, they were extremely unprofitable, and people, still rewarded for them. In our view, profitability story has been amazing over the last 3 to 4 years. Look at where AWS has gone from low 20s to the 30s. Now, today it was a bit lower than what consensus were anticipating, but it ebbs and flows because of the capex that they are investing in throughout their ecosystem. Imagine a business. I mean, last quarter, their AWS profit or operating margins were 39.5%. I mean, that's a 40% margin business. That's pretty impressive across any tech platform. So again, it is lumpy, but that's because of investments. That's because of how they hire. We think longer term, that is still a 40% margin business.
So I want to put the same question I asked of Poonam, Anurag, what you are thinking that you want to know a little bit more about when the company gets on the calls with analysts and investors.
Yeah, the two things that we want to know is what's happening to your capex. Now, my gut feel is they will want to take the capex up because all the other cloud providers have done it, so they can't really be left behind. But then the second question is, well, can you give me an idea for all the capex that's going in? What kind of AI workloads are you seeing? And if you are seeing some AI workloads, why not disclose that number and, talk about it openly as Microsoft has done in the past, 1.5 to 2 years.
Hey, Poonam, Goyal, I want to bring you back in here because you cover e-commerce and athleisure. Carol asked you a really good question about if we can get any insight into the consumer and the health of the consumer by reading into these numbers. Would you say that Amazon is well positioned if you indeed believe that we could be entering a downturn? We did see this question asked yesterday at the Federal Reserve by one of our own reporters, and referencing that Vantage Score report that high income consumers are actually missing on their bills right now when it comes to autos and credit cards. Is Amazon well positioned to be a player if we do see a downturn?
I think if we see a downturn, Amazon's not going to escape the ramifications of that. But that said, compared to everyone else in retail, I do think Amazon will fare better than the rest. And I do think that they will continue to attract the value customer who's just looking for deals and looking for value. Because at the end of the day, when you think about how retailers buy, those with scale have buying power. And Amazon has over $700 billion in GMV based on our estimates. I can't think of a retailer bigger than that in the US that has buying power.
All right, Poonam, we're going to let you go. Poonam Goyal, Senior Analyst for E-commerce and Athleisure. We're going to be watching out for her research and commentary also following the company call. She is, of course, with our Bloomberg Intelligence. Anurag Rana, thank you so much. Senior Tech Analyst at Bloomberg Intelligence. They're in our Chicago bureau. I do want to point out, though, Amazon, the big one right now. We've just talked about the company, but projecting profit for the third quarter that is underwhelming on the expense that it has been doing when it comes to artificial intelligence. The race is on for AI, and it looks like some companies, take Meta, take Microsoft, take Alphabet, investors are impressed, but not necessarily the case here with Amazon.
These days, AI can help you adopt better time management, but it can't stop colleagues booking meetings during lunch. But how about being able to easily adopt industrial AI to streamline your business? Siemens Accelerator helps you find the right AI providers and easily understand what they offer, so you can use modular solutions to quickly scale up and grow your business. That's AI for real, from the global market leader in industrial AI, Siemens. Learn more on usa.siemens.com/AI.
Need branded gear fast, on point, and ready when you are? 4imprint has you covered. With thousands of customizable products from apparel and drinkware to tech and trade show gear, they help businesses stay prepared for anything, planned or last minute. Many items ship within 24 hours, and every order is backed by 4imprint's 360-degree guarantee, so it arrives exactly as expected, right on time. You'll also get free samples, expert support, and total confidence from start to finish. Explore your options at 4imprint.com.
4imprint, for certain.
Is your business struggling to balance your workforce with production demands? In a variable economy, balancing your spending while maintaining the necessary team is tricky. Specialized Recruiting Group provides professional contractors to flex up for peak season without having to raise your core workforce headcount. Go to srgpros.com right now to get access to the expert contractors you need. Try a better way to manage your workforce with Specialized Recruiting Group.